Hello and welcome to Virtual Investor Conferences. My name is Anthony Kraus, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Onar Inc. Please note, you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Claude Stanow, Chief Executive Officer of Onar Inc., which trades on the OTCQB venture market under the symbol RELT. Welcome back, Claude.
Thank you for having me. It's great to be here today, and appreciate everybody who's joining in to walk through a presentation about the company and what we're doing, which I think is the first time we're kind of showing some of the information we're having today. So I think it's going to be exciting and hopefully give a lot of information to everybody that's going to be here. And then, of course, we're going to try to do some Q&A at the end. So let's jump right in. Onar, marketing the future today, right? We're going to talk about who Onar is because to date, we've put out a bunch of news, but we recently became public as a reverse merger through Reliant Holdings. So as mentioned, we're still trading under RELT, and we're still in the process of kind of completing our initial audit, which will kind of share a lot of information with everybody. But I think it was our goal of today to really do two things. One, give an overview on who Onar is and what our business is all about, as well as two, talk about some of the things we're doing to develop technology, leverage artificial intelligence, and doing so in a specific way, not just to serve our needs, but also serve clients better in kind of our general positioning. So Onar, at a high level, is we're aiming to build a bright constellation of marketing champions united by a shared vision of excellence. I'll dive into what that means. I'm not going to read everything on all these slides because there's a lot of information here, but everyone will have access to be able to download that after the fact. So let's look at us at a glance, right? At its core, Onar is a technology-first network of service companies built to deliver performance through disruptive marketing and technology. So you think of our business, we have a 90% recurring revenue business across our three subsidiaries we'll talk about. We're aiming to do 4 to 5 acquisitions by the end of next year. We'll talk about that as well. We also expect our employee count to be over 100 employees by next year, as well as total top line GAAP revenue of $20 million plus. Our business is 75% digital. So we have a very high level which makes a lot of sense, kind of leaning into the digital marketing realm of the world. And there's a $1.3 trillion addressable market for our area and service of business. And we'll talk more in detail there. So Onar, where did it come from, who we are, and what we're trying to do. So the business was founded in late 2021 with a very specific vision. That was to acquire and operate best-in-class technology-first marketing agencies that deliver measurable results for growing companies, specifically the middle market. The company was originally called Intergram Worldwide. It's existed privately for a few years. And of course, now with bringing me on board in the reverse merger into RELT, we're now going to be a publicly traded company. So all intents and purposes, we're not brand new, but we are just getting started. There's a lot of stuff to happen here, and we'll talk through that. So let's just first talk about the market opportunity. Some of these names, some of you guys may be aware of, right? When you look at the overall kind of market of just purely marketing services, right? You have a lot of behemoths that exist there, from WPP to Publicis to IPG. We're playing in that same world, right? But we're doing something a little bit different, right? Our big thing is we're being built from day one, leveraging technology and artificial intelligence, and we're really focused on serving the middle market, right? Obviously, it's a huge opportunity and a huge industry, even though the largest 4 kind of holding companies don't even make up the majority of the spend that's happening for advertising and marketing companies. There's just a lot of opportunity. So let's just talk about that addressable market that I talked about earlier. So 1.3 trillion. And really, these are kind of the 3 areas that we are thinking about as we look at our business, right? Artificial intelligence, of course, arguably huge area, basically kind of building our own AI-enabled tools and services. The next one is digital transformation. We'll talk about kind of really what that means in a little bit, but digital transformation really for kind of middle market and growth stage companies that are just starting to really understand how important that is to what they're doing. And then, of course, digital marketing services, which, as we mentioned earlier, is a huge core aspect of our business. So through these 3 areas specifically, we have a total addressable market of $1.3 trillion. So kind of to summarize, right? Clients today are seeking technology first solutions that drive revenue with the flexibility of outsourcing, but ultimately need one-stop shops to deliver results. So that's what we're trying to put together here, right? We're building a network of agencies that deliver those one-stop shop results, but have these technology first solutions that the companies and clients we work with can benefit from that high level of expertise across different sectors and industries. The other thing is most agencies are slow to adapt new technologies like AI. There's a lot of talk about AI and technology, but in reality, you have the large kind of holding companies and you have a lot of kind of new companies getting up and running, but they're all built on kind of a historically different and kind of outdated way of approaching. And so from our perspective, we're different and we're built from the beginning of differently. So looking into kind of just some quotes to kind of support that, one that I always like to talk about is middle market firms, right? Because we're really focused on those sort of clients, kind of companies doing 50 to a few $100 million in revenue. They're prioritizing technology improvements and operational efficiency, with 54% of the middle market leaders citing technology and marketing as key to their growth, right? Today's day and age, marketing and sales and revenue and performance are all kind of one and one. And that's really, a huge focus for these middle market companies. So as I said, our model from day one is platform light, technology first, and modular. We've designed it so we can own and operate independent agencies to help them scale business performance for middle market and growth stage companies. So high level, how we're set up, we look at technology as the tip of the spear. Obviously, this is the AI and Technology Virtual Investor Conference. It's a huge part of what we're doing. Hub and spoke infrastructure. So Onar is a holding company for all intensive purposes, but we really let our individual operating businesses do what they do best and kind of self-fund and operate, but then get supported kind of from a central hub that is Onar. We don't buy competitive agencies, right? So for us, we're not going to have multiple brands under one roof that are going after the same client set. Some of you may have heard me talk about the automotive example in the past, right? There are certain people who need the pickup truck, who want the sports car, or who want the highly energy efficient car, right? And there might be some options, but for all intensive purposes, you're counting on that family of brands to support and be what you want and have all those solutions kind of under one roof. The other big thing for us is global team, right? We believe in global perspectives. 60% of our workforce is international. We're across 5 different continents, and we are continuously looking at how to be more global, both from a thought perspective and team perspective, as well as kind of a client perspective. I'm going to jump into a little bit about artificial intelligence and how it's affecting marketing and how we're using it. I think the biggest one that maybe is a little bit obvious, but is creative velocity, right? The ad that you're seeing on the left for a client of ours was completely done with artificial intelligence, right? So this means no photo shoots needed for ad creative in a lot of cases, and it's basically cut down the amount of time that we need to spend on rendering creative by 90%, and that's a direct result of artificial intelligence. The other big thing is data visualization. We now can visualize data in new dimensions, allowing us to identify target audiences that were previously undetectable. So if you look at the little chart on the bottom right of the screen, right, this is a blend of 3 different types of machine learning algorithms that were used to visualize psychographic data blended with performance data to create the colored clusters, which can be classified as target personas, right? So because we have AI and these technologies, we're able to kind of bring these things together in such a way where we're better targeting who that end user is. The next thing is website optimization. So we have some proprietary technology that we're developing right now that's basically going to allow us to do website optimization in real time in the future, right? And then the last but not least, of course, server-side large language modules. So we use all the data from all our campaigns and then some to basically train large language models on this proprietary data to basically then prompt them and be able to get better decision making based on historical results and data. Jumping a little bit further, this gives you a look at some of our technology stack and how we look at AI versus technology, right? Of course, I just talked about reporting and analytics. So we ingest performance data, we clean it, we normalize it, and we structure it so that AI tools can train off it, right? So we train off our own data as well as basically use it to increase performance in ways that were never done before. Same thing on the creative side, which we talked about. It's velocity. I use the analogy sometimes as when, architects got rid of drafting rooms because of AutoCAD. We're at the same kind of inflection point as it exists for original creative, being able to kind of move much quicker, reduce the amount of manpower we need, and have more iterative creative that we can test than ever beforehand to hopefully get better performance in the end. So moving on to kind of how we look at our position, we talked about some of the traditional big agencies and big consultancies, and then kind of you look at the flip side of the small boutiques and highly specialized consultancies. We're really trying to put ourselves kind of directly in the middle of both, right? And kind of in the sweet spot, again, with the focus on serving those middle market companies, right? Where we have enough of a broad speciality between kind of the offerings we have, but really also have that ability to go deep tactically to provide kind of the solutions that a CEO or CMO that we're dealing with directly is going to need. So now we're going to just roll through our three different agencies that we currently own. Again, we've talked about technology first. We've talked about measurable growth and results, but I think many people don't know about the subsidiary businesses that exist within Onar. So first and foremost, I talked about being 75% digital. That's driven by Storia, our flagship performance marketing agency. We talked about a lot of the AI and technology that we're using and with them and just the business in general. But I think the other thing we want to talk about is how do we differentiate ourselves in the market from a pricing perspective? So because of AI and technology, we have a different pricing model than almost any other agency out there, especially in the performance space. Most performance marketing companies operate by charging a percentage of the ad spend that a client is spending. For a number of reasons, we felt that that was misaligned, especially for middle market clients, because if it requires more advertising dollars to be spent, we're charging more, not necessarily tying it to performance. And so that was a misalignment of incentives. So a big thing that we do is everything we offer is productized. So instead of charging based on how much advertising dollars a client is spending in the digital ecosystem, for example, we're charging based on the platforms that we are using, and typically around the amount of creative that exists. So there's no increasing of our costs because the client has to spend more to generate more performance. And we're a fixed cost in their marketing stack as they think through. And it's been a huge differentiator for us. And it also allows us to have much more predictable recurring revenue, which we think is important from an enterprise perspective and a planning perspective. I'm going to keep moving on. We're going to talk about Of Costs, which is our medical marketing agency. The business was previously called VMed. We're announcing kind of a rebrand here. So you guys are all the first to see and hear about this rebrand. So here's the new logo and branding. So Of Costs, right, it was a basically dates back to Hippocrates of Costs, right? So when we were thinking about growing our business VMed, which predominantly started in the area of working on behalf of laboratories and other service providers that want to market B2B to doctors, hospitals, and those sort of businesses, we thought, as we're going to grow this, what better way to kind of tie the brand to the godfather of modern medicine, right? Most doctors take the Hippocratic oath to as part of being a doctor, right? And so when we were thinking about how to bring our brand together and really kind of be a leader in the medical marketing space, we settled on Of Costs as our new brand. Last but not least, we'll talk about experiential agency, Chalk. So Chalk is our experiential business. For those of you who are not familiar with it, it is basically bringing brands to life in the physical world. That can mean a lot of different things, from trade shows to big immersive events and experiences. For us, we're highly focused on recurring, predictable, productized experiential offerings. So for us, that means trade shows, that means sampling, that means field marketing, things that are high volumes, right, and long-term campaigns that are planned versus chasing single giant immersive experience. Because again, we're really focused on things that deliver results for our clients. And we believe the frequency and the volume of person-to-person interactions that are uniquely human is what drive results for the clients we're looking to serve. So again, just in summary, kind of our three businesses currently in our ecosystem. You have Storia, our performance marketing business, Of Cost, which is our full service healthcare and medical marketing business, and of course, Chalk, our experiential marketing business. So let's just talk about the ecosystem a little bit deeper. So again, we have a 90% client retention year over year, which is, I think, a huge testament to the level of service and really the focus. Our top clients are growing by 10% year over year, and we have over 50 clients, right? So again, our goal is to have as much diversified revenue as humanly possible with the business as we continue to grow. And we work across a range of industries. In terms of Storia, it's mostly B2C, right? Helping companies that want to sell products or sell services online. In terms of costs, it's B2B, right? Working with medical practices and basically delivering kind of people who want to market to those healthcare providers. And then Chalk is both B2B and B2C in terms of how we're doing events and experiences. So these are just a little bit of our values, in no particular order. Obviously, the brand is called Honor. This whole idea of acting with honor or built with honor is kind of playing through everything what we're trying to do, right? Transparency, performance, delivery of results is key to that. Of course, elevating excellence. We're looking to basically use technology, do better, and deliver better results for an area of the work of business that is just generally underserviced. And then, of course, we have a big vision, a big aspiration to kind of be a significant player in this holding company world that exists for marketing agencies. But we're, looking to do that kind of with our own approach, our own way of doing that. So again, just kind of our team and our offices. Look, we as an organization to date are primarily completely remote. We're trying to stay that way as long as possible. But our team is we have kind of hubs in each one of these markets. So we have a pretty interesting perspective between obviously some major U.S. markets and then of course Central and South America and Europe. And then we have team even beyond that in Asia. But these are kind of our central hubs. Most of you have met me and know me, but this is kind of the rest of the team. Chris Becker is our president, oversees all kinds of operations internally in terms of execution and client delivery. Sam Mendez, chief of staff, is basically all kind of back office functions, HR, insurance, along with Paolo, who's on our finance team. David Abraham is leading our M&A process, which, as you guys are coming to learn, is a huge aspect of what we're doing. People call it a roll-up. We're really focused on accretive acquisitions, but it's key to how we're building the business. And then Sarah Wetmore, who's our most recent team member, who's now leading kind of our corporate comms and marketing efforts as we start to develop our own positioning in the market. Before I jump to questions, I'm going to go through the last piece of kind of this presentation, which just talks about mergers and acquisitions. Obviously, organic growth is core to what we're doing, but for us to get from point A to point B, we're really focused on making acquisitions and smart ones. So when we talk about acquisitions, and kind of our process, we're really focused upon, a certain level of criteria. And one of those, obviously, we talked about earlier was technology, but of course, and being technology obsessed. But the other things that really need to work, obviously, is they have to have collaborative culture. They have to be willing and desire to change and grow, right? Which is a huge part of the process. And we really have to feel like there is a clear fit to where we're going. So in some cases, we're looking at acquisitions that maybe tuck into one of our existing businesses. So for example, another performance digital agency that could be in Storia, or in some cases, we're looking at a whole other industry like healthcare, right? Where we feel that we can have subject matter expertise that can then be supported by the other agencies in our group. How we think about it is we're trying to buy narrowly specialized agencies, right, in the kind of $500,000 to $3 million EBITDA range, and kind of bring those all together for us to, as a company, grow eventually and scale to the kind of $20+ million EBITDA range, eventually uplisting to NASDAQ. That's our goal. That's our target. That's what we're rowing towards. And that's how we're thinking about it. Some examples of what that looks like. And again, none of these have been LOI signed or anything else, but the types of agencies we're looking at. So experiential agencies, we're talking about out-of-home agencies, which is billboards, and that can be technology in the out-of-home space. That could also be people who actually own assets. Public relations is another area. Digital is another area. So these are just examples of 4 of the businesses that we're currently in conversations with and working to get acquisitions lined up about. So I've talked a lot. I've seen a bunch of questions come in. My information is here for all those of you who want to talk with me, but I think maybe now I'll take the last 10 or 11 minutes to specifically answer some questions. So if you give me a second, I'm going to Oh, here we go. So one of the first questions that are here is, what are the attributes of an agency you would consider for acquisition? So I think first and foremost, we are looking for highly specialized. So it would be a very rare case where we're going to buy a full service business, right? So for example, I mentioned subject matter expertise. Maybe an agency that's highly specialized in a sector like energy, right? Where it's a growing area. We think that there's a lot of recession proofness in terms of the types of clients. And we think that we maybe can kind of leverage our digital agency or experiential agency tactically to support that offering. The other big thing is obviously size and scale, right? So we're really focused on kind of that 500,000 to $3 million EBITDA range, agencies that we think have the potential to grow, but need the support, advisory expertise of a group to kind of help them grow. And also are transparently a little bit under the size and scale that some of the large competitors in the space are looking to acquire. And then, of course, cultural fit, integration fit, and specifically a situation where the founders looking to sell the business really fit in terms of their future plans with what we want to do, right? In most cases, the founders, when they're selling their business, are transitioning out, and we need to feel comfortable in that transition. In some cases, those founders are staying on board. So there's a bunch of different factors, but at a high level, that's what we're looking at. And of course, profitable businesses, right? Agencies should be cash flow positive businesses, should be able to kind of have the right ratios and should be fundamentally strong businesses. Next question. Okay. How scalable is your business? Do you have to add to head count when you add new accounts? It's a really great question. AI it was a perfect example of kind of what's happened the opposite way. We actually reduced headcount as a result of AI allowing us to make iterative creative that much with that much more velocity. At the end of the day, there is an increase of cost behind client service, but when we focus on the productized way of doing it, and when we get over the hump of kind of platform expenses and costs, there's a pretty exponential opportunity for kind of people costs to start tapering off and become more and more efficient, especially as AI and technology, especially as some of our own proprietary AI and technology allows us to do more with less. Again, I use the architect example. They used to have 100 people in a room drafting things. Now they can do that all with AutoCAD and be a single architect and handle more clients. So we're seeing that same thing driven by the investments we're making in technology to support what we're doing. Okay, next question. Can you discuss how you acquire clients and what your growth drivers are for 2025? Yeah, happy to talk about how we acquire clients. For a big focus for us has been thought leadership and creating kind of a presence in the space around our individual agencies, that then allows us, because this is not the same thing as selling a widget where you call somebody and they are ready and willing to buy because they need that widget, right? Typically, we are getting integrated, meeting companies and customers who are trying to evaluate what they need, and they might not even know what marketing service they need. Or in some cases, they're coming to us ready with a decision to kind of bid out and work with different marketing agencies. And so we're in that pipeline. So for us, it's really a combination of basically building our own market presence, right? Our thought leadership kind of being top of mind as much as humanly possible. This includes conferences, this includes, out there networking. And then, of course, leveraging the acquisitions we do. A huge source of new revenue tends to be the referral sources, right? So when we get new clients that are there, we have a big program where most of our new business organically is coming from internal referral, right? We're doing a good job for our clients and they want to refer us other people they know. Or in some cases, they're growing, right? One of our largest clients has grown significantly and continues to want to grow, right? So the other thing is when we think about clients that are ideal for us, we don't want to be 100% of their marketing spend day one, right? We want to be 10 or 20% of what they're spending or what their potential to spend is. I'll give you an example. We work with a company that is a near $1 billion company that's traditionally made all their money in retail and wholesale. Their digital business was only 10% or less of what they overall do. And needless to say, there's obviously a huge amount of growth and opportunity. So we're farming. We're farming more than even hunting. And that's what, in my experience, I've seen to be the most successful versus traditional cold sales outreach. So as we do acquisitions, we believe there's going to be farming in terms of existing clients and referrals, also cross-selling, which is a huge opportunity, right? As I mentioned, now some of our healthcare clients are starting to use digital services that wasn't kind of core what they're doing. And then, of course, the sheer kind of thought leadership that will kind of bring those people in the door. And that's how we're driving it. And then, of course, last question you mentioned about 2025. Obviously, acquisitions will be part of those growth drivers as well. Okay, last question in the queue. Oh, two more questions in the queue that I'm going to try to go for. What is your acquisition model? Do you retain the management and founders? So it depends on the situation. I will say more times than not, the founders are transitioning out, but they have an incentive to refer to the business. The reason for that is nothing against the founders. Is a lot of times they can be an impediment to change and integration, right? And we're buying and building, right? We're not just acquiring for the sake of revenue growth or just to add to the portfolio, as some of the larger agency groups are out there. We're specifically buying businesses that we think our knowledge, our expertise can help grow and scale those businesses by applying different types of techniques in terms of operationally or something along those natures. So I'd say most of the time, that's the sort of arrangement with founders transitioning out, but having an incentive to refer and having their earnouts tied to kind of revenue expansion. But in certain cases, especially since we're still a small organization, there are situations where we'll keep founders involved because they are actually selling because they want help taking their business to the next level, and we believe that we can do that, and they demonstrate a willingness to work with us and be collaborative to create that sort of growth. So I think that's all the questions for today. And we're almost at time, so I think that works. I really appreciate everybody tuning in and the questions that we came in today. I'm also happy to field one-on-ones. I know the team at OTC Markets is going to share some availability to meet with me in person. I'm also happy to take emails. But I think that's everything. So thank you so much, everybody.